Come on, Naeem. Come on, Naeem. This man's always fucking dialed in. Soon? Who the fuck is Soon? Welcome to the stream, Soon. Hold on. Let me pull up the Mr. Producer. We got all them hoes. I said, Mr. Producer. Come on, Naeem. Let's make sure the sound's good. Oh, yeah, we got the sound good. Boom. Name. Who the fuck do you think you're dealing with? Joey Bananas. Is that who you think it is? I can't seem to get a straight answer from you. And Soon, who are you? You got fucking Chinese hieroglyphics and what the fuck in your name, and all you said was Soon. Soon what? Soon bull run? Soon alt season? Soon Valhalla? Soon Lambo? Soon wealth? Soon Euro tour? Soon Rio de Janeiro, Brazil? Soon honeys? Soon what? Tell me. What are we soon to? All right, ladies and gentlemen. Fucking what an odd time in markets. Just odd. So let's take a look here. Because we got a lot of different things taking place. There's no real consensus in terms of what's going to happen. He is Korean or Chinese. Thank you, Naeem. There's no real consensus in terms of what's going on in the market. Pump soon? Question mark? Coin? Which coin, Harry? Which one's going to pump soon? I don't know. You tell me. Pump soon? Question mark? Coin. Pump soon. We'll see. We're about to talk about it. Yeah, pump soon, Naeem says. Well, there's your answer. We're pumping soon. Gentlemen, there's no consensus across X, across retail, across... There's no consensus in terms of where this price action is going to go right now, okay? Which is good in the sense that it's not going to be an overcrowded trade to the downside or to the upside. So it's not necessarily going to be, oh, everybody's bullish. Everybody thinks we're going to new all-time highs. PEPE. PEPE. He wants Pepe coin. He wants to see if Pepe is going to pump. All right, we'll talk about PEPE. So there's no consensus in terms of the market directionality. The fear and greed index is also right in the middle. Okay, we're not super over greedy. We're not super over fearful. We're right in the middle. Okay, so when you have split consensus, you have, or not even consensus, you have split sentiment. You're gonna get a big move to one side or the other. Okay, the VWAPs, the indicators, the RSIs, everything is showing that there is a big move incoming. We're due for a big move. Obviously, the $1 million question is to which side? To the downside or to the upside? How do we position for this? Are we shorting? Are we long? Are we accumulating assets right now? Are we buying spot bags, new spot bags, old spot bags, DCAing? What are we doing? So we'll take a look at the markets and we'll see where I think we're at and where I think we're going to go. And we'll have to start the conversation with FOMC. So FOMC meeting happens yesterday. Everybody's favorite event, everybody's favorite meeting, the Federal Open Market Committee, FOMC. Daddy Jerome comes out onto stage and does what? What did he do yesterday? He said, once again, literally fucking nothing. On top of that, he also continues to refuse to cut interest rates at the Fed. The interest rates have not been cut since last year. Why are they not cutting interest rates? Well, the rationale behind it, what Jerome keeps telling us, is we want to get to our target inflation of 2%, Which, by the way, these inflation numbers just, I mean, I know you guys know this. I hope so. Inflation numbers that come out from the Fed are fucking the most bullshit numbers of all. It's bullshit. It's not real. Inflation. What's true inflation? What's actually inflation? The US dollar has X amount of value. You print more US dollars, therefore there's more supply. Each individual dollar is now worth less. That's real. That's inflation. That's true inflation. But the Fed, what do? What do they sell you on? A basket of goods. We're going to pick that good and this good and the milk and the eggs and the bread and da-da-da. And based off however the price of those goods change, that's how we're going to base inflation. That's not inflation. That's just their way of selling you a number that looks a lot better than what true inflation is. True inflation is how much are they increasing the monetary supply? How much are they increasing the printing of the US dollar, which inherently is inflationary. You print more dollars, you have a bigger supply, each one is worth less. True inflation, I'll give you an example. I was just talking about this with somebody, I think it might have been Bobby on yesterday's stream. But I was saying how inflation during COVID, this is why we had such an outrageous bull run in 2021, is because from March 2022 when COVID started to the money printing that ensued after COVID, the global M2, right? M2, monetary supply. Global M2 went up by 40% in a year. 40%. They increased the global supply of liquidity, of money, by 40%. So what's true inflation? Inflation wasn't 5%, 6%, whatever the fuck they try to tell you it was that year. Let's actually look it up because I just want to show you how fucking fake these numbers are. Just as context as we talk about the FOMC meeting. Just for context. So let's see. What was the U.S. inflation rate in 2020? Let's take a look. I just want to show you how fake this is. Here we go. Historical U.S. inflation rate year by year, 1929 to 2025. All right, just give me the fucking year. What are we at? Okay, here we go. So in 2020, the inflation rate was 1.4%, is what they tried to say. Let's see. Hold on. What is these columns? Federal funds rate, inflation rate year over year from previous December. Okay, got you. So in 2020, they said that the inflation rate was 1.4%. Okay. 2021, so this would have been the numbers for 2020, COVID. Inflation rate, U.S. inflation rate was 7%. 2022, so this would have been 2021's numbers. U.S. inflation rate was 6.5%. Okay. The federal funds rate in 2020 was 0.25%. 0.25%. The federal funds rate in 2021, 0.25%. Basically free to borrow money. Why did the Fed do this at the time? Well, because the economies were all fucking halted because they locked everything down, told people they couldn't open up their businesses, and they had to stay locked down in their homes. There was no money being transacted. There was no economy taking, everything was fucked. So they had to print money and hand out money to people. They also made it super cheap to borrow money. So the federal fund rate dropped all the way down to 0.25%, which is incredibly bullish for risk assets. Why? Well, because money's free, so you can borrow a fuck ton of money and just inject that into markets, inject that into your business, grow the value of your company. But the inflation rate was 1.4% into 7% into 6.5%. Okay. In 2022, when we went into the bear market, why did we go into a bear market? Because they raised all of the interest rates from 0.25% to 4.5%. Okay. And then 5.5% in 2023. 2024, we got down to 4.48%. And now we're still at 4.25%, I believe, or 4.5%. So during COVID, it was 0.25. Right now, we're at 4.5%. Our interest rates in the U.S. are so fucking high. It is ridiculous. And the Fed Jerome, they're being political about it, and they're not lowering the interest rates because it's Trump asking them to lower the interest rates. Everybody's anti-Trump. It's fucking stupid. It doesn't make sense for the interest rates to still be 4.5%. It doesn't. The inflation's down. People, the prices of goods are coming down. Tariffs have not caused any issues. They keep waiting to say, oh, we got to see what tariffs do. We got to see what tariffs do to the price of goods. We got to see how that inflation looks. We haven't seen it yet, but we got to see. What do you have to fucking see? The tariffs are already in place. They've been doing this. So, anyways, but the overall point I was making is they said that it was only 1.4% in 2020 inflation. 2021, 7% inflation. 2022, 6.5% inflation. Okay? That's bullshit. Obviously, that's not real. You're telling me that since COVID in 2020, do you really think the price of the goods that you guys buy, think about 2020, before 2020, the price of things, gas, eggs, food, whatever the fuck. I don't think about the price because I don't need to, but you guys. So think about that. Do you think we increased the monetary supply, the value of the US dollar, only decreased by 7%? You really think that that's what the inflation was? Fuck no, that's not what the inflation was. They increased the monetary supply by 40% in 1 year. Guess what inflation was? 40%, not 7%. That's a basket of goods. That's fugaz. That's fake. 7%. Well, bullshit. It's fake, okay? So why am I making this big point before we take a look at charts? So the point I'm making is people think that by them investing into their 401k or the S&P index or a Roth IRA, using these index funds, and they're returning over the course of 60 years, your working career, 40 years, your working career, you're returning on average 10% a year. People look at that like, wow, look at that. That's amazing. I'm making all this money over time. And by the time I retire, I might have $1 million and I can retire and live okay. You're not making money. That's the fallacy of it. You're not making money by getting a 10% return on your money on average over time. That's not real. The only reason you're getting that 10% is that in and of itself is just due to inflation of the US dollar. So your stocks, your portfolio, whatever, just inflates. So you're just losing less money as if you were just holding it in your bank account. You're not actually making money. You're not making money. You are just holding assets that are appreciating in comparison to the fact that the dollar is inflating and depreciating. Does that make sense? You're not actually making money. You're not outpacing inflation. That's a lie. Inflation is not 2%, 3%. Fake. Not true. So, and the reason I say that is because in COVID, 2020, 2021, whenever they increased the monetary supply by 40%, 50%, basically erase almost half of your wealth overnight if you had money saved up, you would have had to have performed over a 50, 60, 70% in markets those years to have actually had made money. Then you would have made money if you perform a 2x. Okay? So my point is that you can put your money in the S&P. You can invest in a 401k. You could. And for most people, that's okay. But at least understand you are not making money at all. The only reason the value of your portfolio is going up is due to the fact that inflation is taking place. TradFi and 401ks and this introduction into the workforce for working class people to invest into these index funds is the greatest financial psyop of our time. Because what these hedge funds, what these major investors are doing, these people who control these markets, what they're doing is they've now created a way for you to perma bid their bags into infinity just passively by investing into this every 2 weeks whenever you get your paycheck and you contribute to your 401k. They've created this way for 80%, 90% of the population to just perma bid their bags, their companies over time. You think they created these 401ks, these Roth IRAs, these ways to invest in these index funds, these S&P 500 as a way to help you get rich because they like you? Of course not. It's a way for them to create liquidity for themselves, so as they trade these markets, there was always money there to be able to be sold into and bought into. It's your money. Because whenever you invest in your 401k, you're investing at tops, you're investing at bottoms, you're investing in between, you're investing in bear markets, bull markets. The S&P 500 could be at all-time highs, very clearly topping, very clearly about to roll over, and you're still dumping in the same amount of money. You're just perma-bidding over time. There's no strategy. There's no nothing, okay? So you got to understand what's happening on a bigger picture to understand how you're going to position on a lower time frame, okay? How's the game being played? What's happening, right? So big points. The Fed keeps saying they want to get inflation down to their target of 2%. Inflation's not actually 2%. It's not actually 3%. It's not actually 5%. That's a lie. Number two, they're making it political, not cutting the rates. There's no reason for rates to still be at 4.5%. No reason. And Jerome said it himself. Economy's in a good place. Unemployment's in a good place. Inflation, by their metrics, is in a good place. Tariffs are not creating inflation. The prices of goods are coming down objectively if you just look at it. So why not cut rates? Well, we don't want to cut rates because Trump wants us to cut rates. So clearly these people don't actually care about you. They should have cut rates yesterday. They didn't. It is what it is. So that's my spiel, bigger picture on inflation. So these inflation numbers that come out whenever you watch these FOMC meetings and you get these numbers, these reports, it's completely fake. That's not, inflation is not 2%. It's not based on a basket. Inflation is not a basket of goods. That's what they sell you on. It's not a basket of goods. Inflation is how much more money did you print? That's inflation. Okay. So I'm going to show you something on Bitcoin here. Actually, you know what? Let's start with equities because this is something I want to take a look at. Start with S&P. All right. S&P basically up only since we had the major jeet from tariff news. Okay. We had these demand zones leveled out, tagged it, bounced, tagged, came up, got back up above this demand, turned it into support right here, drifted back up almost to all-time highs, drifting back down. So two things that can happen, of course, naturally. We have a CME gap here on the S&P, okay? Very possible we come back down, fill this gap before heading higher. Take us till later this year for us to run to Valhalla, okay? That's max pain. We come back down, we fill that CME gap, we wait a couple of more months before we break out. Other scenario, possible, we could just come back down, tag this demand zone, and then start sending it, okay? That's where we're at on equities. What do I think is going to happen? Right now, I'm leaning towards a pullback into here to the top of this demand zone. I don't think we're going to get the full fill of this gap until a later bear market. But I could see this pullback happening into this demand zone, and then we run it probably in July, okay? Later July. So that's where we're at on the S&P. Circle just launched their stock, did their IPO, okay? So what's Circle? Just to give you some broader context in terms of what we're looking at for crypto. So Circle is the company that issues USDC. USDC being the stable coin, okay? Why is this important? Congress just passed legislation to create a regulatory framework for stablecoins. Amazing. So it's going to promote the creation, the using, and the adopting of stablecoin crypto. Okay, so USDC obviously being one of them, Tether being the other one. The biggest is Tether. So Circle, they IPO their stock. This was on Thursday, I believe. Yep, Thursday last week, or Thursday 2 weeks ago. Okay, from Thursday when they IPO'd to now, it's already up 3x. 3x a stock in 2 weeks. Think about that, a stock. Ripping. A stock in 2 weeks is up 3x. Incredible. This is going to have a huge catch-up trade. If we're still in the context of a higher time frame bull market, and we believe we get that last leg on Bitcoin, altcoins, Ethereum, we believe we get that last leg, there's going to be a massive catch-up trade for Circle to get up to closer to MSTR, Coinbase, these other major crypto stocks, basically, being that they're correlated to crypto performance. So why do I say all this? This is a good stock play, okay? Good stock play because it's still early. I know it's already up 3x. I wouldn't necessarily ape right here on a fucking big green candle. But if you get a pullback into anywhere in here, I would say it'd be worthwhile to pick it up because this just dropped. This is going to go higher, okay? So Circle did their IPO. That's bullish because if another crypto company is pumping, well, that's good for crypto. That means people are bullish on crypto, so they want to get exposure to it in TradFi. Let's look at Coinbase as well. Coinbase stock. Another meat stick. Now, why does this make sense? Well, it makes sense because Coinbase, they push USDC token, which is Circle's token, okay? So it makes sense if Circle is pumping hard, people are going to go into Coinbase to use USDC. It's going to get more exposure, more timeshare, more attention, more mind share, more attention. Makes sense that Coinbase stock is starting to pump too. So Coinbase is up quite a bit as well. So let's take a look at this on a macro. Okay. Coinbase stock. Obviously, when the S&P makes new highs, this also just got added to the S&P 500, which is huge for a crypto stock to get added. This likely goes to new highs, okay? But meat stick on here, just the same way we did on Circle. Now, interesting correlation with Coinbase, because I know the gentleman earlier was talking about PEPE. He wants to see PEPE, huh? Let's take a look at PEPE. PEPE and Coinbase trade very correlated. Look at this relationship. Mi bomba. That's not what I wanted. Okay. PEPE and Coinbase trade incredibly correlated. So let's take a look at this relationship, okay? Downtrend, downtrend, break it, huge pump. Break it, huge pump up into here. Top. Downtrend again. Break it, huge pump. Break it, huge pump. Cool. So right here, this is on the weekly. Let's go on the daily. So why I'm still biased for a move up higher as we currently see things. I'll show you right now. Okay. Here's why I'm biased for another move up higher. Okay. Coinbase is breaking out. These two charts are correlated. PEPE is essentially in the same structure that Coinbase stock was before it broke out. Okay. If we believe we get another leg up on the S&P right now, like on this next couple of weeks, obviously Coinbase is going to leg up and you'll see PEPE start to leg up heavily and start to run hard. Okay. But this gives me a bit of confluence, a bit of confirmation. Okay, this looks good. This looks promising. Let's see if we can get this play out on PEPE, where PEPE starts to run too following Coinbase stock. Okay? So the crypto stocks are doing well right now. Okay, that's good. So we like to see that. And Circle's doing well. We like to see that. Okay. So then what's going on with Bitcoin? And what do we see locally on Bitcoin? Well, if we get that pullback to fill the gap on the S&P, you're going to see Bitcoin come down lower and go tag this bull market trend again towards 92 to 94K, right? But this is a view on Bitcoin I haven't seen people talking about, okay? I haven't seen people talking about this view. So on Bitcoin, why are we holding the level that we're holding right now? Well, so we've had this 4-year reaccumulation range on Bitcoin, and we finally broke out and we tagged perfectly the 1.618 fib at 102K. You know, we wicked up a little bit higher, but if you take a look, all the weekly closes took place here, came below. This was basically the top, 102K, and it called it perfectly on the fibs. So what did we do recently on Bitcoin? The reason I believe we're holding the level that we are is because if you keep this 1.618 on Bitcoin, you see it's a clear support for where we're at right now. Okay? This is why I'm still bullish for another leg up higher. We're holding this. So we flipped the previous all-time high, which is about 102,000. We flipped it from resistance, because before, when we broke through, we would nuke immediately, try to push, nuked as soon as we touched it, try to push through, came all the way back down. So we failed to break out. We failed to break out again. This time, we came all the way back up, jumped up above, and now it's clear. This is different. This is very different. This was topping, clearly. This is hanging out above. This is different. This is now, we're turning this into support, which is why I'm still bullish macro. Unless we lose, and I don't see people looking at it this way. This is a nice fib because it's showing clear support right now. So if we don't lose this fib, and this is at about 102,000, 101,000, as long as we don't lose this, I don't see a reason for us to nuke any harder on Bitcoin. I mean, it's clearly turning it into support, which is good, because if this is truly support now, and we're basically doing a quick reaccumulation here for the next week or two, and we're just trying to reaccumulate here, and we're hanging out above this fib, then the next target on Bitcoin is going to be $155,000, $156,000, right? Why do I believe it's going to go there? Well, because if the 1.618 played and then we pump again, why wouldn't the 2.618 play, right? So why wouldn't it hit the 2.618? Of course, it should. So I heard people saying that on the next leg up, I'm hearing like 115, 120K, 120K is the one I keep hearing. Whenever we already went to 111. So why would you say 115 or 120? That doesn't make sense to me. Getting a leg up on Bitcoin up to like 115, 120, that doesn't make any sense to me. When we ran it from down here off the low, we ran up 120% after ranging. Off the low, 120%. The next fib would be 110%. Look at that confluence. The next fib, 2.618, would be 110% move. This one from this low on this range shot straight up 120%. So to me, I don't understand why you would say 115 or 120. That doesn't make sense. If we get this next leg up on Bitcoin, we're going to 150. We're going to 160. That's where we're going. We're not going to 120. You're not going to get, because look, 120 on Bitcoin is right here. That's it? You think it's going to go up from 111, come back down and only go up to 120 and then die? Not for me. That doesn't make sense. If you break, this is the 1.618 fib, we turned it into support. If you start breaking out from this 1.618, the next target is the 2.618. That's normal. That's how fibs play. So if it respected the 1.618, you would expect it to respect the 2.618. So, and it's confluent. Look, that move would be a little bit less than the last one, but it would make sense from the low. 120% from the low on this one for the next run up would be 108%, 110%. It makes sense. It's confluent. So that would make sense to be the next move. So I'm expecting that run to 155. I believe that that's where we head to next on the leg up. Okay. Now, if we lose, this support, which is the 1.618, and we come down into here, and then hit this trend, I would expect us to bounce off the trend. If we lose the bull market trend, cooked. If we lose the bull market trend again, and we don't do a quick reclaim of it as we had done back in April right here and come back up, it's cooked. Double top, it's cooked. We cannot lose this bull market trend, okay? We can lose the top of this range again, or this support. We could, and then try to reclaim it again. It's possible, okay? That's fine, as long as we don't lose the bull market trend. But if we lose it, it's cooked. If we lose the bull market trend, it's cooked, okay? On top of all that, it doesn't really make sense from a VWAP perspective for us to have cycle topped yet either. So look at this. This is interesting. So you look at the VWAPs too, right? Because we were playing off of the 30-day VWAP. Look where the 60-day VWAP is coming up to meet us at. So this VWAP is coming up to meet us at above this support, the 102K. So if we lost this 30-day and we are looking for another leg of support, we'll probably intercept the VWAP 30 or 60-day, intercept this, turn this into support, and use that to bounce up higher, right? So I like to see that. That's good that you're seeing that VWAP come up and meet us at this 102 region, okay? So it's good. It'll be support. So I like this. As it stands, I like it. The other bit of confluence is we just had FOMC. Okay, well, let's take a look at something else. Let's hide the fib. Let's hide the trend. Let's throw in the FOMC meeting indicator. Okay. So this is a good indicator as well, just to show... Okay. So this indicator right here shows when the FOMC meeting dates are and then how we perform after them. Okay. Typically, whenever we have a red region, meaning that we have an FOMC meeting and then for the next couple of months we end up lower as opposed to higher, typically the next FOMC meeting range is green, okay? So let's take a look at this. Cycle top. So here's last bull market. Green, green, red, green, green, green. Two reds in a row, we go into a bear market. So two reds, a green, two reds, a green, two reds, some greens, red, green, two reds, bull market. Okay. So bull market, we never get more than one red in a row before a green. Bear market, we get consecutive reds before we get greens. End of bull market or bear market, which is literally right here. This is where we drew our trend line. So it's actually perfect. Look. Yeah, look. Look at the confluence. So as soon as this is our bull market trend, as soon as the bear market ended, we get 1, 2, 3, 4 periods in a row of FOMC meetings where from the meeting date to the next meeting date, we experienced upside. We ended higher than where we started. Okay. So why am I taking a look at this? In the context of being in a bull market, and we're assuming we're still in a bull market. When you're in a bull market, you never get more than one meeting, FOMC meeting period. You never get more than one red in a row before you see some green upside. So here, you get 1, 2, 4 in a row, sessions green. You get a red, then you get a green. You get a red, then you get 1, 2, 3, 4 greens again. Okay. So 4 red, 1 red, 4 red, 1 green, 1 red. Look at this pattern. Right? 4, 1 red, 1 green, 1 red. 4, 1 red, 1 green, 1 red, right? It's the same thing as this. 1, 2, 3, 4. 1, 2, 3, 4. And then what would be next if it follows this pattern again? As long as we're assuming we're still in a bull market. Well, it would be 1, 2, 3, 4. 1, 2, 3, 4 to the upside again, which would make sense. Okay. FOMC meetings are great market, places for the market to reverse. Okay. So we had a red session here. Okay. If we're assuming that this pattern continues of 4 green, red, green, red, 4 green, red, I would expect at least 1 or 2 more green sessions, right? So it gives me more confidence that we bled into FOMC. We de-risked into it. And typically when that happens, when we're bleeding into the FOMC meeting, afterwards, as long as nothing crazy happens, we usually move up higher. So for me, it's okay. I expect this session to end green on the next meeting date, which would be July 28th. So the end of next month. I would expect us to end up higher on Bitcoin than where we started. Where did we start? Well, we started about 104,000. Okay. So I'm positive in that sense. I do believe we move up higher. Okay. This is a great indicator. FOMC meeting dates. Okay. And then you can even see the return it gave us every time. So from March 19th, which I'm covering it. Let me move this shit. So now you can see it. So on the left-hand side, you can see even the returns that happened during those periods. The fuck is calling me? You can see, well, now you can't see because it's covered. Let me move it like this. Here we go. Me bomba. Fuck. Didn't change it. You can see it up there, though. 29%. Okay. So let's get rid of this. Let's take a look at ETH. Okay. ETH also loading a move. So the positive thing, regardless of what direction you believe the market's going in, there's going to be volatility that's about to come. There's no hanging out around here much longer. ETH has just been moving completely sideways since May, beginning of May. If you look on the weekly, look at the weekly, how crazy this is. ETH on the weekly chart, think about this. ETH on the weekly chart has been trading within 2% range for 1, 2, 3, 4, 5, 6 weeks in a row. For 6 weeks in a row, ETH has been within a 2% price range. That's compression. That's indecision. So when this gives, it's going to give hard one way or the other. To the downside, if it gives to the downside, you're fucking nuking hard. You're nuking all the way back down to at least this demand zone of 2100. Okay. Nuking hard. On the flip side, though, if we're under the impression, under the context that we're bullish, this is going to resolve to the upside hard. So it's going to rip. Take out the CME gap up in here, which I can show you on this chart. It's going to take out this CME gap, come up to at least 3,300, and then very quickly thereon afterwards, take out the $4,000 CME gap. Let's go on the daily so you can see them. Okay. So what I'm doing right now, just so you understand my mindset, is I have a reason to believe. Well, I know for almost certain macro bigger picture, we are absolutely still in a bull market. Okay. All of my macro bull market indicators still show that we're in a macro bull run. Okay. So I'm not worried about that. Right now, the trick, the key to making money is going to be, when can I identify the large downside volatility so I can position in large shorts, accumulate more capital, re-enter into my altcoin positions with more size. It's going to be the first thing. Second thing is identifying from here the directionality of the market, in the sense that, do I believe from these levels we shoot to new all-time highs, or am I expecting a larger macro pullback back to 92, 94,000 on Bitcoin, reloading and then ripping it up higher later this year? Okay. The reason that's important is because either right now would be the time to be loading up hard into altcoin positions before we run it up, or if we pull back down further on Bitcoin, then you're going to want to obviously load up much lower. So here's what I think is going to happen on the altcoins. So as long as this support holds on the daily, I'm slowly accumulating a little bit more positions. As long as we're holding this support on Bitcoin, I'm looking for entries on alts. As long as we're holding this support, okay? Support is support until support is broken. Why does it make sense that is likely, not likely, but it's for sure the spot for us to be bottoming from? Because it's confluent with this altcoin chart. So I said weeks ago, and I drew out these demand zones from quite a while ago, that if you get back into this demand zone, I have this X here, this is a bid territory. This is a bid spot. Look what we did. We popped into it, popped back up, popped into it, popped back up. Now we're rolling back down into it. We didn't pop back up yet. So this could be us bottoming here. If Bitcoin only rolls down to 102,000 maximum, you're looking to bottom in this demand zone right here. This is where you're aping altcoins. This is where you're aping Pepe, Andy, Wolf, Brett, Per, Farcoin, fucking SPX 6900. This is where you're accumulating. HYPE, right? HYPE. And so, what was I looking at? What was I looking at here? So this is where I'm accumulating. If Bitcoin goes to 92, 94,000, you're going to likely get another move like this to try to shake people out one more time. You come into this demand zone. This is generational bid again. This was generational bid, bottom. This is amazing bid. This is generational. Okay. So this one would be confluent. So this is, remember, this is the others chart. So this is altcoin total market cap, meaning that, what's this? A mentor of mine described consolidation like a loading spring, explode up or down. Correct. Exactly. That's what I was saying, is that consolidation, that movement sideways on Ethereum means that for sure we're going to get a volatile move one way or the other. We're just positioned for the upside. And then, does anybody know about this real token? Shh, but it's called Mike's probably Fugaz, so don't listen to Mike. This would be 92. So this is your bid here. Okay. These are your demand zones. These are your bid zones for the confluent price of Bitcoin. Okay. So I'm buying here in this demand. I'm buying here in this demand. Okay. That's the play. What are we playing for? This is what we're playing for. This is the play. Others, crypto total market cap excluding top 10 assets. This chart rips up to the 1.618 linear, so conservative target on a breakout. 180% move, almost a 3x move, right? Almost a 3x move. Your favorite shitcoin is going to run 8 to 10x if it's a much smaller market cap. That's the move we're playing. 92K BTC, 102K BTC. Those are your two levels. Bigger picture, we run up to 155 to 160K BTC. This is what you're going to see on altcoins. Okay? Mike Figueroa. That's the name of the token. It's called Real. They partnered with XRP. Let's see if he's fucking with us. This thing's fucking smoked. Is this the one right here? Holy shit. What the fuck is this? This dropped in December of 2021. Mike, explain yourself. Explain yourself to me. Or what are we looking at right now? This shit pumped, dumped to zero. It peaked at $28. It's now worth... This was worth $28. It's worth less than 1 penny. It's worth 0.3 pennies. 30% of a penny it's worth right now. It was at $28. What the fuck am I looking at right now, Mike? Is this what you have to say for yourself? And there's no way. Is this it? Is this the token? Really? Really? Real USD? That's the one. It's the only crypto I see. Real Realm spot crypto. Realm. Is it this one? This one's also shit. Well, I've never heard of it, Mike, so I wouldn't be fucking with it. Here's XRP. Ultimate scam chart, but good for people trading it. XRP clearly does not want to lose this 196 $2 level. Okay. This is where I would start looking to accumulate this. You probably get the 2.618. I would only do it if you have huge size, at least $500,000 that you're trying to throw into something. If you're not throwing in at least $500,000, there's no really reason to put into XRP because you're going to get more multiples off of something else. Okay. So that's where I'm at, gentlemen. We're just basically waiting to see what the fuck we do in equities and Bitcoin. Macro, like I said, I'm under the impression that we break to new all-time highs on ETH. It's just a matter of when. Same thing with Bitcoin. This cycle to me is not over. It's not over. We still have quantitative easing or QE that can take place. We still have rate cuts that can take place that are bullish. We can still have the wars is not great, but over time those things will subside. But yeah, macro, bullish, locally, maybe we get a pull back to the trend line, maybe not. We start ripping from here. Either way, next target on Bitcoin is 155,000, 160,000. Makes sense. I'll give you the one pair chart too, why ETH looks like it's going to fucking rip face too on this next leg up to be excited about. This Sol ETH pair continues to nuke, continuing to nuke. Straight down from this level. Straight down. Lost the trend, straight down, all the way to this demand zone. In a bull market environment, which we're expecting, that means the price of Sol USD is going to go up. So for this chart to continue to go down, that means ETH has to be pumping harder than Sol. I believe that's going to happen. So position your Pepe, your Andy, your Wolf. We're at demand zones on all the boys club. So this is bid territory for boys club. Andy's a bid right now. Brett is a bid right now. Pepe, generational bid right now. You got lucky. You got all the way back into this demand zone. This should hold. Okay. So Pepe's a bid. Brett's a bid. Andy's a bid. Wolf off the lows. Right at demand. This is also a bid. Okay. Hype. Bid. This is a bid. Pullbacks have been few and far between on hype. Few and far between. Go back to Pepe because this is the wrong panel. Few and far between. Okay. Who could have foreseen? I sent this in the Discord. Fibs play. 1.618 fib. Guess where hype tagged perfectly. You can't make this shit up. I had this drawn out for months. This has been here, this 1.618. Nobody moved it. Nobody changed it. This has been here. You guys have been watching it for me every week. Where did we wake up to? Perfect tag of the 1.618. Target hit. People take profit. Get a pullback. So that's how you know when you're accumulating assets in the supply territory or down here if you're a savage, or up down in here if you're a savage. But clearly this was the supply to chew through. You're accumulating down here. You're looking for a quick 2x, a quick 50% move. You get your move straight up, retest the range, boom, you get your 1.618, you pull back. So at the lowest, arithmetic is $64. Linear 2.618, $67. So your next target on hype is about $65, $66. That's where we're running to. Cool. Boom. All right, ladies and gentlemen. That's all I got for you today. If you're not inside the Discord already, join. Money to be made, money to be printed. We're trading perpetual futures, shorts, longing, accumulating spot positions. Well, I'm not going to say that. Other big things that are taking place inside that we're not going to talk about publicly. Because I don't want to give other people the idea on how we're making the money using this tool. But if you guys have questions, comments, concerns, let me know. You got my socials on the screen. Hold on, let me actually do Mr. Producer. Hello, Mr. Producer. There are my socials right there, ladies and gentlemen. This is our year. No matter what, this is our year, and we're going to win big. We're going to make sure that everybody on our team We win big. My team's always won. So everybody on my team expect winning, expect to do a lot of winning, expect to make a lot of money, expect to be great, expect to improve yourself, expect to raise your lid, expect yourself to become a better man, woman. Expect all these things because that's what our team does. So for those of you that are a part of the network, growing with us, making money, accumulating your positions, changing your family's life, click on the link in the description. Enroll as a professional, a gentleman if you want access to the private crypto plays of the Discord, which you get one-on-one with me. I work with you on your portfolio. I show you what I'm buying, what I'm selling, when I'm doing it, what I'm accumulating before we talk about it on YouTube. Get yourself an edge in these markets. It's a zero-sum game. In order for somebody to make money, somebody else has to lose money. So instead of playing this game by yourself, without a team, without help, without an edge, and continuing to lose money or make much less money than what you could have, join the winning team so you can have that edge. If you can win, why wouldn't you do it? So outside that, ladies and gentlemen, right hour on the dot. Let me do a little Mr. Producer. We got all them hoes. All right, Naeem. Peace.